All right, welcome to Coffee with Mark and Markus. Wow, yesterday the Dow actually closed higher, above the 200-day moving average for the first time ever. Today we had some retailers reporting. We had Walmart reporting and Home Depot, and this is what traders have been waiting for. So we'll take a look at this. And then, of course, we will take a look at our positions and see how they are doing. Well, before we get started, if this is your first time here, I'm Markus Heitkoetter. This is my head coach, Mark Hodge. We have a shit ton of trading experience because we have been trading for a long time and we trade real money on real accounts. So this is what you'll see here in the show, and we're not afraid to tell you as it is. And hope that you're enjoying it, like it, subscribe it, and let's jump over to the markets. And Mark, yesterday, pretty much all three major indices did well yesterday.
Yeah, nice move after a slightly lower start and finishing near session highs. Now, just a small correction, Marcus, because you did say that the Dow finished above its 200-day moving average for the first time ever, and it
Oh,
has been above its moving the 200-day
geez.
before, but it was the first time since April 20th, I believe, and that's pretty impressive.
Yeah, well, as you can see, I'm not in my studio, so I'm a little bit out of it. It's all good. No, that is pretty impressive. I mean, not yet for the S&P, still below, but attacking it. So now the question, of course, is will this 200-day moving average act as resistance, or will we go through and then hopefully have support? Same here with the Nasdaq. Even though the Nasdaq has an impressive run thus far, we are still below the 200-day moving average. But the 200-day moving average, Mark, that's an indicator that many are paying attention to.
Sure, 50 and 200-day moving averages have just been popular for decades with funds and individual retail traders, as potential areas for longer term trends. And so you have a 50 200-day crossover, which is watched, but then also just the price of a daily chart versus those averages. And so a close above 200 days could potentially be a sign that things are moving higher. I wouldn't. The good old lady hasn't sung yet on this one, but
Yeah, it's
it's
too early
positive
to call it.
nonetheless.
Too early to call it. Hey, talking about calling it, so I wanted to just follow up on one thing from yesterday. You remember when I was drawing my magic triangle there, and we said,
Oh, there you
"Hey,
go.
what do you think? Will it break up to the upside or downside?" I guess we were both right because, as you can see, at first it was breaking to the downside, but the sustained move was to the upside.
Yeah, and it's funny because I remember after we did the video, we were chatting because I was about to bet some ribeyes on this one, and I mentioned that I thought that it would break to the downside just because of everything going on and us being up for 4 weeks straight. But the markets have a tendency to do exactly opposite of what you think. That's why we want to trade what we see, not what we think. So with that said, I thought it was going to rally, and it did.
Yeah. All right, so looking at the S&P 500 today, just overall moving a little bit lower, but it's
Yeah.
kind of lackluster. I mean, not a whole lot going on. Nasdaq a little bit weaker here. The Dow hanging in there. The Dow is still positive for the day, and that's basically because of the two big names in the Dow that have reported earnings. And this is what everybody was looking for, because if we look at the economic calendar this week, it's all about retail. So tomorrow retail sales will be reported, and then of course the FOMC meeting minutes, but we have a lot of retailers reporting this week.
Yeah, and some have said, okay, well, it's also about housing, but to be honest, the housing reports today no real effect on the markets. So I agree, it's really all about retail. Home Depot, they reported a quarterly profit of $5.05 a share. This was 11 cents higher than expected, and revenue and comparable store sales also were better than forecast. They said that the number of transactions fell during the quarter, which actually led to an overnight move that was negative. They were down overnight, but during the trading session, it looks like traders said, "Who cares? We like the other numbers better." And nice little rally.
Well, plus they said we had a record quarter. We never sold more than last quarter, and I mean, this with all the recession talks going on. Okay, we're in a
Sure.
recession and consumer confidence is waning. This is why retail right now is so in focus because, I mean, retailers like Home Depot or like Walmart, I mean, they would feel it first if there is a change in consumer spending. But I mean, also Walmart, look at this, up
Yeah.
almost 6% this morning.
Yeah, they reported better than expected revenue and earnings per share. They said that comparable store sales beat estimates. They did project that adjusted earnings will fall slightly less than this year than previously thought. So that's where Walmart was higher, pretty much all pre-market, and you see that gap up too. So with projected earnings not as bad as they expected, traders loving that because it's always about what the guidance is, right? What's
Right.
the expectation? Are we going to be doing better than expected, or in line or worse? And there have been a few times where companies recently have adjusted, saying that they expect some numbers that are worse. So this was a big one for Walmart.
Yeah, and this is where it's interesting of how it all plays together because this is coming in better than expected. And as you said, they basically both, Home Depot and Walmart, said our guidance for 2020 remains the same. We're not adjusting it. We're still sticking to what we said earlier this year. So this basically means the economy is still strong. And that's why this morning we see a slight change here in the prediction of what the Fed will do during the next meeting. It used to be around 64% probability that they're raising interest rates by 0.5%. Now it dropped to 60% of this morning. I mean, we're still, 36 days away. But it's just interesting how traders are now perceiving, okay, seems the economy is doing good. That means that the Fed will probably keep aggressively hiking to get the inflation under control because we're still far away from their 2% target with inflation.
Yeah, and there's still a lot of time left. We mentioned it before the next meeting. I think 36 days. You said
Yeah.
before. So we have another CPI data report. We also have PPI. There's CP or PCE as well. Jobs report that's coming out. Do you think they're going to do 3 quarters or 50 basis point?
Well, it's too early to say. I mean, ask me again in a few weeks, and I'll put a wager on. Right now, I would say half a percentage point.
Yeah, I'm with you on that one.
So I would say right now half percentage point.
Yep.
All right. So with all this going on in the markets, I mean, we just see today on a daily chart how super quiet the markets are. Let's take a look at our positions and how we traded. So we jump over to PowerX Optimizer. I'm jumping over here to my watch list, and I mean, Nvidia. So yesterday I tried to sell the 200 calls because I own 600 shares at 195. Was trying to do this for $1.20, did not get filled, and then this morning Nvidia pulled back. So some of our mastermind members sold the 200 or the 195 yesterday, and they're already looking at some nice profits here. I missed that one.
Yeah, and really kind of the same situation for me with AMD. I was hoping we'd get a little more follow through. I'm not in a rush or panic to let this one go, but I am looking to move on. We had some traders in the mastermind group get some nice premium at the 104 level, and I decided to wait. AMD trade around 99 right now.
Yeah. So TPR, the other story, got assigned with 2,700 shares at 37. And wow, this is looking good. I mean, TPR this morning moving higher. I mean, this is based on retail because this is also a retailer, and I think that Walmart and Home Depot is helping them out. They are reporting earnings in 2 days, so this will be interesting. I sold a call at the 38 level, so if by Friday they close above 38, then we can quickly go to the calculator. In this case, I'll keep the whole premium that I sold the calls for, $720, plus an additional $3,000 from the increase in stock price for a profit of $3,722. So that would be nice.
Yeah, nice. You've been in this for a while, and just kind of a maybe a little bit of a teaching moment or a learning lesson. If you're new to selling calls, make sure you're selling calls at a strike that you're willing to let the shares get called away. Because as the stock starts moving towards that call that you sold, or even goes into money, sometimes new call sellers, they panic and freak out, and they want to buy the call back to avoid getting those shares called away, and that's the worst time to be doing it. So we don't want to do that. If anything, at some point you might choose to roll those calls if it's in the money, or you could close the entire trade by selling the shares and buying the call back if it makes sense. And I know that the PowerX calculator will tell us exactly what that 90% of the max profit on the covered call is. But right now, even though the call's increasing, this is working out perfect. So you're not trying to buy it back at all right now because it's just expensive. Unless you could get the 90%, but it would have to fall
Right.
at that point.
But for this, it would have to drop. So
Yep.
this brings us to Pfizer. So Pfizer, a trade that I did last week, sold the 47 puts expiring this week. And I got a partial fill to buy them back because this is where, again, we talked about the 90% profit and does it make sense to buy back the calls. And here, I'm okay freeing up the buying power. And I've been filled on half of my position thus far. So I just keep the order here in the market, let the market do its thing. And it seems that with Pfizer right now pushing higher, I might actually get filled today, freeing up some buying power because then I'm only in these two positions and I'm willing to be up to 5 positions in this account. And so if tomorrow during the report, during the retail sales report, or maybe during the FOMC meeting, the markets take a nosedive, I can sell some more puts.
Yeah, that's what I'm looking forward to. I would love the semiconductors to stay positive and stay up, but I wouldn't mind a little bit of a pullback so I could reestablish some positions at good levels and collect some more premium, maybe get assigned on another trade or two.
Yeah, looking at new positions, not a whole lot going on. I mean, we only, according to our scanner criteria right now, got 10 stocks on there, and that's pretty normal for a super quiet day like this. I mean, if you look at the 5-minute chart right now, this is a super narrow range, and we're bouncing right back. So not a whole lot happening here. We looked at a few that we already identified as a no, mainly because of the strike prices, because there's always these two criteria. Number one, you want to make sure that you want to own the stock, and number two, do you want to own it at that strike price? And it was mainly because of the strike prices that we ruled out quite a few this morning.
Yeah, and this is where we either need volatility to pick up a little bit, where the premium is increasing because there's a little more uncertainty, or the stocks to pull back a little bit for us to be comfortable selling the strikes that are available. The VIX is trading around 20, so the VIX is still relatively low compared to what we normally see.
Yeah. And this here's an example. For example, the 3M that just popped up. We have this blue line here, which is our lowest close indicator that is showing you the lowest close of the last 8 weeks. And this is always a good rule of thumb at which we want to try to sell puts. So as you can see here, for triple M, MMM, it's fairly high. We would rather sell puts at 130 because that is a level that has been tested recently. And for that reason, that would be a no. Also, light, we talked about this. Quite interesting, but yeah, the support is more around 80, between 70 and 80. And right now, the strike price that we want to achieve to get our 30% annualized right here would be too high. Now, of course, one of the things is that we could lower here the filter criteria and say we're looking for an RI of, let's say, a minimum of 20%. So then we're getting a few more stocks on the scanner here. But usually it's kind of the same. It means that the strike prices are too high.
But good point with adjusting the filter.
Right. So there's
Inter-
different ways that you can do. One of the things that we like to do when there's little going on like today is set the dividends to all instead of just yes, and then maybe even go for a higher P ratio instead of 50, go to 100. Recently, I've been experimenting a little bit with the market cap. So there's a few things that you can do here to get more choices, but make sure that you're not just trading because you're bored on a day like
Yeah.
this. I mean, we just got out of our mastermind call and we basically told everybody, you know what, just take the day off. And look at this. We're right back where we opened basically. And we're
Yeah, Dow's
checking right
making
now
session
yesterday's
high.
close. So not a whole lot going on.
Yep.
Interesting also, Bitcoin really has a hard time going through 25,000. On Sunday, they cracked the 25,000 level for the first time in quite a while, since when? June, but can't really stay above 25,000.
Resistance, resistance, resistance.
Okay, anyhow. So, not a whole lot going on here today, but if you would like to know how we trade these crazy markets, take a look at these videos here. So, they help you to understand what we do here and why. And then we'll see you again tomorrow. And tomorrow could definitely be a more exciting day with these reports coming out.
Agreed. Looking forward to it. Happy trading, everybody.